If you make over $400,000 this year and you still want to buy an Airbnb for the tax savings and the cash flow, the good news is there's still time to close on a home this year. So here's everything you need to know to make sure you do everything right to get the tax savings this year. There are 3 criteria. So number 1 is you need to buy and place the property in service this calendar year to qualify for having ran it as a short-term rental. Number 2, you're going to make sure you actually run it as a short-term rental, meaning the average duration of stay needs to be 7 days or less. So the good news is this is super easy. You'll have no issues with that. Nobody's going to be booking this thing for more than 5 to 10 days on average. So you're good there. And number 3, minimum material participation. So you need to participate minimum 100 hours this year and no less than any other one individual. So here's the best part. There's literally no other one individual who's going to be spending more time than even 30 to 60 hours before the end of this year. Okay. So you typically have 2 teams who support you on the business. Number 1 is your co-hosting or property management team. Number 2 is typically your cleaning team. So let's talk about both their hours and how they math out. So there are literally fewer than 2 months left on the year that you'll actually be live with the property. So on average, there'll be one person from the cleaning team who maybe spends 6 to 25 hours in one given month. And then same thing with the co-host team. There'll maybe be 1 or 2 guys who spend 20 to 30 hours to help you get the property live. And then ongoing maybe 10 to 15 hours every single month. Again, there are only 2 months left on the year pretty much. Nobody's really going to be spending more than 30 to 50 hours on this property. So don't need to worry about them participating more than 100 hours, which would be more than your participation. So now that we got that solved, how are you and maybe your spouse going to participate minimum 100 hours with both of your hours being able to contribute? It's simple. You're going to visit the property. You're probably going to spend an extended 3, 4, maybe a 5-day weekend at the property, probably logging 20 to 26 hours per day between the 2 of your hours because you guys are going to be there overseeing what the general contractor, landscaping teams, and designers are probably doing to do the post-close enhancements, those revenue-driving amenities that we're going to get live on the property so that you hit the maximum cash flow that you possibly can. And the best part is our team's going to help you maximize the cash flow by organizing and scheduling all of those people to visit the property the same weekend that you're going to be there. We'll take the guesswork and the legwork out of finding, negotiating those people for you, and even showing them the exact design guide that we've helped hundreds of clients execute on so that you can get all the maximum revenue-driving amenities in the exterior, the interior redesign stuff, a general contractor helping with some small wear and tear stuff so that you don't have to stress about this. All right, so that's how you're going to qualify and get this stuff done. Now, some other tax-related questions a lot of clients have had is number 1, how is the bonus depreciation amount calculated? Well, it's actually quite simple. So on average, we've been seeing clients offset around 25 to 35% of whatever the total purchase price on the property is against their total taxable income. So here's how this works for $1 million property as an example. Let's say you buy $1 million property and the land is crazy high value. It's maybe a half acre of land. It's $200,000 in value. So you're going to subtract that $200,000 amount from the $1 million purchase price, and you're going to get $800,000 in assessed value. You can't offset the land. It's not depreciable. So we're going to focus on what amount of that $800,000 can we offset. Well, later on this year or the beginning of next year, you just need to get this done before your tax returns get filed. You're going to order what's called a cost segregation study. And P.S., we're also going to help you with the intro to one of 3 companies who do great work for the cost seg study, so you don't have to stress about this. That cost segregation study is going to literally show you every single item in the home that's above the ground, and they're going to give what's called a lifespan on that thing. So anything that has a 20-year lifespan or less that is going to eventually need to be replaced every 5, 10, 15, 20 years, the IRS is going to allow you to accelerate 100% of the estimated value of that item, that appliance, the wall, the roof, the flooring, the tiles, whatever, into year 1. So going off that $800,000 assessed value example, around 35 to maybe 55% of everything in the home is going to fall in that category of 20 years or left. So the way this maths out is roughly $250,000 to maybe $350,000 of that $800,000 assessed value. So again, around 30 something to maybe 40, 45% of that total value will typically get offset into year 1. And then here's the even better part. You can also offset our program fee. It's over $20,000. So you're going to be able to offset all of that amount. And you're going to be able to offset the inspection that you pay for, the appraisal that you pay for, the $15,000 that you maybe pay your designer, the $20,000 that you pay the landscaping team, maybe the general contractor that you maybe pay $5,000 to $10,000. And all that's going to start stacking up. So there's this really cool scenario where you get this 1-to-1 golden ratio of almost every dollar, or even more than every dollar that you're putting into the deal, comes back to you in net effective tax savings, especially for our clients who are over $400,000 per year in household income. We're in that 35 or 37% tax bracket. The net effective tax tax savings on doing this are quite substantial for those people. We'll also introduce you to a CPA or multiple CPAs who actually specialize in helping hundreds of clients every single year maximize their tax returns with short-term rental tax strategy. So most clients like to get intros to those CPAs to either number one, just help them with the one return that they need for this one or multiple properties that they purchase with our help, and or help them handle all of their tax strategy and all of their returns that they need filed. So we've got you covered there. I've iterated through many CPAs over the years. It took a long time to find 2 or 3 guys who are absolutely phenomenal at this. We'll take the guesswork and the legwork out of helping you find those parties. So congratulations. That's pretty much everything you need clarity on. So I'm not a CPA. I'm not an enrolled agent. I'm not a tax advisor. I don't give one-to-one personalized tax advice. We're not a tax prep firm, but we'll definitely be able to help you buy this real estate so that you can get the bonus depreciation, you can qualify for the material participation, and then we'll pair you up with the cost segregation study company, the CPA that you need, so that you can get all this stuff done this year, which again, we only have a few months left on the year. So click the link somewhere around this video. Check out our homepage. Check out the YouTube channel. We have tons of case studies, client testimonials, breakdowns on our YouTube channel showing case studies of properties we've helped clients close on, breakdowns on the tax stuff. Even though I'm not a CPA, not an enrolled agent, I can help give you the right clarity to start your research journey, and then a CPA we can introduce you to help you clarify anything else along the way. So click the link somewhere around this video. We look forward to speaking with you soon.